Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Tuesday, October 30th. Bulls finally got a moral victory, so that's got to count for something. As stocks closed up on the day, all the major indexes up over 1% as we continue to work through earnings and continue to work through this bearish market. Looking ahead to tomorrow's earnings slate, the big one is Facebook. They came out tonight. It looks like, just at first glance, I didn't get a chance to dive into it, but it looked like they beat earnings and missed revenue. We're not looking all that great, but nothing too dramatic in the after hours trading market. So Facebook, kind of a big one. You also have Baidu coming out tonight. We've got about 16 S&P companies coming out tonight and around a dozen-ish coming out tomorrow before the open. So still plenty of earnings ahead of us as we continue to work our way through the trading week. As we take a look at our overall indexes for the first time in a while, we were able to close in the green and also kind of towards the top end of the trading range. Most of the, we have to go way back until the middle of the month back here. The last time we saw kind of a strong closing candle. I don't know how much it means, but it's something, right? Showed a little bit of follow through all day long as the bulls really kind of took control of the day here today. We haven't done anything to suggest that, we're turning around just yet. But of course, step one is getting somebody to step in the first place, right? So as we kind of talked about, last week and yesterday, this, is looking like a bearish retracement from just a broad perspective. We're making lower highs, lower lows. We're in a downtrend. The bears are clearly overall in charge right now. And so until we start breaking some resistance, putting in higher lows, I think that's how we have to look at it from a technical point of view. I would love to see some follow through to give us a couple bullish days for some of those bullish, rare, but they do exist, right? Hormel, Tractor Supply, Coca-Cola. We've seen some nice bullish setups the last couple of days. I would like them to get a little benefit from a little bit of a rally. And I'd also like to maybe not be so extended to the downside. So if we can find some bearish retracements at the as the week kind of winds down. So that will be certainly something I'll be watching for. As I pointed out yesterday, one of the things that I personally keep an eye on is the 9 exponential moving average, the pink average that you see on my chart here, as kind of the first test, the first challenge, besides resistance and support, obviously. So that, breaking that is always step one for me. We haven't done that from a broad point of view by any means, certainly not on the S&P 500. So that'll be an area I'm going to watch. It's right around 2,700, a nice round number. Been some intraday resistance from yesterday. So that will definitely be a price that I'm going to be monitoring if we're able to continue this follow through going into tomorrow. We'll see, right? It's been a while since we've been able to see any follow through from the bulls the day after. So we'll see if they can finally buck that trend. Looking at the NASDAQ, really same song and dance, a little bit maybe more extended to the downside on the NASDAQ, to my eyes at least, but really the same general chart. Again, as we work into, if we're able to, again, we can always kind of watch for breakdowns too, but if we actually get the rally that and the retracement that so many of us are hoping to get to set up some new trades, watch that, those round numbers, watch obviously the 200's a long ways away, but that would certainly be a test in my mind. I'll be watching the 9 EMA, the 20 simple moving average can be something to be keeping an eye on there as well. Over in the Dow, same thing. We're a little bit closer to challenging those averages for whatever that is worth, as well as that nice round 25 number. So that will be something I think we can monitor as we, again, we need to get some follow through, and I'm not going to hold my breath until I see it. But I mean, we are extended to the downside, and certainly a relief rally seems like it's about due. Doesn't mean it has to start tomorrow, but with as extended as stocks are to the downside, I think we all think it's about time for it to happen. Looking at the Russell, pretty strong bounce back day over there as well. Watch, that breakdown point, back through here obviously will be a challenge zone if we're able to work our way into it. But again, I think as we look at things, step one, I mean, we've seen this before. We've seen a bullish day before, only to have no follow through the next day, right? It's tough in a bearish trend because it's hard to get people on board. Who wants to buy, whether it's the 9 or resistance or another moving average or whatever it is? It's hard for us to want to buy, against the trend, and so it's hard for it to get going. But hopefully, we're able to see a little bit of a rally to set up some new bearish trades, as well as, like I said, there certainly are still bullish opportunities. While overall the market is bearish, of course, there are things that are doing all right out there. As we shift gears into our sectors, the material sector was able to hold support, strong showing. We're going to see this, pretty much across the board today in most of our sectors, because it's going to mimic the market, right? Strong overall day, closing near the top. Certainly not universally, but certainly on the material sector for sure. Again, I'm going to be watching. This has been a very bearish area, in my opinion. Not an area that I'm super high on buying. First chance I get, I'd love to see a retracement, work into that 53 range is my hope. We'll see if I get it. But we are holding support. Of course, breaking support is also a signal, potentially from a bearish point of view. But right now, certainly, holding that support. And, even before today's nice day, they've been finally holding a support level. Over in energy, after kind of briefly and that's a tough one because there's so many tails, but I would argue breaking a little bit below support, although again, there could be an argument because we didn't break all the tails there, rallied back up, and I didn't have to use my brain because they're clearly above it today. Yesterday, were they not? Could have went either way probably. Today, I think we can all say pretty emphatically that they did close and held that support level very extended to the downside as we kind of move into the week. Obviously, we have the EIA report coming out tomorrow, so that can impact crude. That certainly can trickle down into the energy sector as well. But I'll continue to monitor that general price point again. I'll be honest, I kind of want to like energy more than I actually do. But things like ConocoPhillips is kind of hanging out on its 200-day moving average. Those things I don't really mind if I get some good signals. Interestingly, well, again, not enough to get me to go crazy. One thing that did happen is, we actually were able to close above that 9 EMA here today in the financial sector. Again, that is just one thing, and that, I know not everybody uses that particular indicator. I do. But that is, something I do consider positive, albeit, not super positive by any means. Step one, if we can't break the 9, we can't go up, right? Regardless of how you feel about it, is a little bit of a positivity. It's definitely showed some nice strength in that sector. Again, we're still very extended to the downside, but nice little rally off of support. Even, before today, it was kind of ugly, but we've been rallying off of that support level. We still have plenty of challenges across the board, and the financial sector is no different. But it's at least a little something going on over there. The industrials had a pretty strong day, but my concern is they're, have to break back through that old support resistance zone that's been so important for them. That will certainly be an area where I will be looking for bears to step back in. It doesn't have to stop there, but that would be kind of the first place my eyes will be looking from a bearish perspective. And if I'm from a bullish point of view, I'd want to at the very least get back above that before I got too crazy in the industrial sector. Looking at tech, bounce back there too, but really not all that impressive looking from a chart. Some things we have some support. Financials, we have a close above the 9. And while maybe those aren't, enough to get me on board, and as a general rule in this market, they're not to get me on board to be a bull. There's something. Then you look at the technology sector, and well, it's not showing. Yeah, it went up today. That's about as bullish as it gets, right? That's really the only case. Whereas I don't really trust the materials, but I understand people betting on support and things like that. Really, until we start to show some life over here, that's an area that I'll be very cautious on personally. Interestingly, on our staples, of course, it's held up pretty well and was able to push to and through that resistance level here today, breaking out over on the staples ETF. We've got choppy overhead, in store for us. I just kind of put this line on here earlier today to kind of see where that next major level of resistance is. And we got a little ways, but there's going to be a little bit of resistance here and there between now and then. Pretty extended, and I know not everybody, myself included, really want to necessarily jump into bullish breakouts when they're extended to the upside, but definitely a positive bullish development building on the momentum. It'll be interesting to see how they hold up, especially if money's actually willing to come back into stocks in the short term. It's been a defensive area. We've seen money coming into it far more than other areas, maybe utilities, as of late, while the market's been so bearish. So it'll be interesting to see how it holds up if we're to get a little bit of a rally. Wouldn't mind seeing a pullback before I got too excited, but you gotta appreciate that break. It's not easy to do, right? We watched it fail. We watched it look good and fail there several times. So we know that that's not been an easy thing for it to do. Over in utilities, they did, and the reason I've been shying away from them the last couple of days as a whole is they're kind of in a fairly tight range, and they basically went back and forth between that range. Didn't quite make it to the high end of that range today, but did make it to the bottom. That's kind of starting to consolidate a little bit. I still think, for me at least, a break is going to be something I'll be looking for. As long as we're continuing to make these higher highs and higher lows, I will give it the bullish bias personally, but I'm not loving it, from a broad perspective as an entry while we're kind of getting squished, or pinching between, support and resistance are getting closer and closer together. And there's still some room in there. Don't get me wrong, but it is definitely slowly but surely tightening up over there. But again, still remains, in a nice overall upward move, fighting with resistance. We have to be a little concerned of that failed breakout, but as long as we're making higher lows, I'm okay with keeping a little bit of a bullish perspective on the utility sector, personally at least. Healthcare, of course, as you guys know, one of my favorite areas, has continued to hold that 200-day moving average over the last several days. Nice upward movement here today. Hasn't really done a whole lot other than that. But again, in the market we've been in, we take what we can get if it's positive for the bulls, right? Definitely some nice movement over there as well. I still think, from a broad point of view, we want to start to see things break resistance or your moving average or whatever your signals are. I'm not seeing a ton of signals right now. That's why I'm looking at this more as a bearish retracement opportunity than the bottom, if you will. And who knows, maybe we change our mind as the days go by. But certainly very positive, development really over the last week, in my opinion, in the healthcare sector. Obviously, it wasn't immune to all the selling that went in the market, but it was one of those areas that at least held support, and held that 200, which to me, at least, that matters. Had a bounce back day over in the discretionary, and kind of like materials, maybe even a little more so. I don't know. This has been, very ugly for a while. I really just think that this is a watch for a retracement opportunity, not really thinking that, anything telling me buy, particularly in this area. I'm going to be watching the 106 and that 90 MA personally as points for it to start to slow down if it's able to work into those areas. Real estate, nice day here today, carrying through yesterday's momentum. I continue to be neutral on the real estate sector because I don't have a great read on it, and I don't really feel like I've changed my mind today. But as we kind of said before, one of the things that we do have going on is we have been making these higher highs and higher lows. And while it's been messy, we've seen some big back and forth, that has continued to hold steady. So my opinion, is I don't really have a good handle on it, and I don't want to mess around with it right now. But the reality is it is doing that. So I understand folks who have been trading into that sector. A break of the 50 could make me feel a little bit better, maybe not specifically as an entry point, but as a potential, okay, I think I can trust real estate. I think that's what I will want to be seeing before I'm ready to get on board with it. But again, that is just me. Definitely a strong day over there and showing some nice characteristics of an upward trend. Over in communication services, joined in on the rally. Still, kind of like the NASDAQ hasn't done a whole lot to make me feel good about its chart or anything like that. Seems like it kind of joined in as opposed to led the rally, to me at least, here today. So I'm not seeing any great scenarios over there that aren't, bearish retracement type of things. But again, if we're getting that retracement, we can look for those bullish opportunities, can look to trade into strength, like we've, talked about before. You have KO, who, of course, broke out and really ran here today. You have Tractor Supply Company that broke out and ran yesterday, closing the breakout point today. You have Nordstrom's that broke out very nicely today and actually broke the next level of resistance back here. So, again, whenever I'm trading in or against the market, so to speak, I'm in a downward trend, I'm looking to trade bullish. I'm in an uptrend, I'm looking to trade bearish. I always want to be going into strength or weakness, respectively, not going to try to pick the bottom of things because it's easier to go with the flow as traders, right? As we shift gears over into our dollar, bounced, again, strong day, kind of continue to fight right at 97. I've not stared at it all day long, but I've seen it at 97.01, 96.99 on multiple occasions. That, of course, is that previous resistance level. We're obviously showing a ton of strength over there, but we are at resistance, which to me at least means let's look for a pullback opportunity, see if we can break it before we get too crazy. I never want to buy at resistance, no matter what it is that I'm looking at potentially buying. And that's kind of how, I think all of us here, aren't, I think we all see it, dollar strong, been breaking resistance, it's in the overall upward move. But again, that 97 was a big turning point. I mean, it was kicking butt, last time it got to 97 too. And I know the final day's candle looked a little different than today's, but we ran into a lot of trouble there. I think we always have to respect resistance, even if our expectations are it's going to break. I think we want to make sure we get that confirmation before we do anything with that. And good afternoon, Thiago. Nice to see you. I finally got a second screen set up so I can see the chat, guys. So feel free to yell at me or say hello. It's great to see you guys. So I always appreciate your time. Taking a look at gold, definitely starting to sell back to the downside. Interesting for me, at least. We have, that 1220 that we know is a breakout point that we've watched for a while. I do think we can watch that as, if we are interested in bullish opportunities within gold, this pullback has been a good thing, if we're not already in it, obviously. If we're in it, well, we could probably do without it, right? But as long as, again, we've said many times, and I'm certainly not the only coach here at Tackle Trading that feels this way, as long as we hold that 1220, we're pretty happy to be on the bullish side of things. We can all say pretty much a similar thing with silver. I know for me personally, I've been much more on the side of let it break 15 before you get too excited, but I know not everybody's there. And those folks who don't feel like it needs to break 15, they've got to be loving what they're seeing here today for sure. The doji right at the old support, that old resistance right at that 15 doesn't mean a lot because it's kind of flattened out on that 50, at least to me, but it's something from a risk to reward point of view, very tempting price, right? If we buy here just blindly, well, if it breaks support, we'll just get out, lose a little bit. If it even works back to resistance, to heck with 15, we've got a pretty good risk to reward ratio. If you're interested in this type of situation, not specifically silver, because it's not my place to tell you what to do, but this type of pattern, you can always go in to a shorter term time frame and look for opportunities there. I know a lot of folks like the 15-minute chart. I prefer the hourly chart personally, but again, that is a preference thing. If we get some breaks, always want to be, on the right side of things. Again, one of my own personal rules, whatever I'm always doing, I'm always looking to move in with the 9. So if it's on an hourly chart, I want it to close above the 9 at the bare minimum before I buy, or close below before I go bearish at a bare minimum. That's kind of that momentum average that I think is the most useful for me, at least. But we can kind of watch for it to break. But again, that's me on the hourly chart. We can look at 15 or even 5-minute charts to build entries if that's something that we're interested in, or we can just play the good old fashioned, and in a situation like this might be the easiest way to do it. If it breaks above today's high tomorrow, we can use that as confirmation, right? Or if it closes above today's high tomorrow, then on Thursday, we can use that as confirmation. So you'll be thinking about, not specifically on silver, because, again, you guys probably already have your own opinions on silver. You don't need me to tell you what to do with it. But from an entry perspective, it's always nice to have a few ways that we can get into things, right? On a small doji, that traditional goes above today's high tomorrow works really well. But on bigger candlesticks, it's sometimes very difficult to get a risk to reward if we wait for that to happen. So shrinking the time frame into an hourly or a 15 or whatever time frame you like to use can be very beneficial. But gotta like where we are from a potential bullish point of view on silver. And as long as this holds, I'm comfortable with people buying it however their personal rules dictate. If that breaks, I wouldn't even fault somebody for hanging around as long as this holds. Now, if this holds, that or breaks, I'm sorry, that would be a pretty bearish signal. And that's not what my expectations are. But again, I always like to plan ahead just in case. Well, yeah, if silver broke that, I could be interested in all of a sudden being a bear. Now, I expect this level of support to hold because I always expect support and resistance to work like they're supposed to. So very interesting development in the metals, getting that little pullback. I do think, from a pullback point of view, I think silver looks a little better than gold, just technically. But again, that's just my personal view of it. You don't have to agree with that. Natural gas continues to be volatile and sensible. It's one of those areas. It's behaving pretty rationally, as far as holding support, not breaking through resistance, although it's been a bit since we've challenged resistance. It's really been behaving fairly rationally, but very volatile, back and forth. And again, we saw it today, had a pretty strong showing at one point in time. I thought maybe we were actually going to challenge resistance before kind of giving up and closing, closer towards the bottom of the day's range. So again, in my opinion, unless you were day trading this, which obviously there are some great opportunities with this volatility in the natural gas futures market. If you are a day trader, probably loving it. From a swing point of view, I still kind of think if you're buying it at the low, getting that good risk to reward, or you're waiting for it to break to the upside one way or the other, or potentially pull back to the 50 and that old breakout point. So in the middle is kind of tough for swing traders, in my opinion. At least for me, it is. I don't really do too much in the middle. I'm an edge guy. I'll get it close, or when it's breaking the edges is my general philosophy when it comes to trading. So, but really nothing to see here. Continues to trade within that range. Support continues to hold. Have yet to really challenge resistance, but certainly we want to be keeping an eye on that because, that's been a pretty big deal. Crude continues to be pretty volatile and fairly weak. It'll go back and forth, but we never really can establish any real momentum after closing above the 200 briefly on Friday. Failed to intraday resistance yesterday, pushed down and pushed down even further today. Broke that little low that we put in last week before rallying up off of it here today, closing kind of in the middle-ish. But again, really to me, this is still pretty overall bearish, not really a great swing environment. I do think really the kind of price points that you should be looking for, again, my opinion, is going to be these lows here or breaking back above resistance up over here. I could see, going short really as long as it kind of breaks that swing low from last week. I could see the argument for going short there, but we just don't have a lot of room between that point and that what I believe is a fairly significant level of support. So I really think that it's kind of a watch for me, pull back to that support. When we can talk break resistance, then we can talk do something before I get too crazy. If it made me do anything, I'd go bearish because might as well bet on the trend, right? But luckily we get to be pretty picky when it comes to this stuff. So nothing wrong with that. Overall, we do continue to be pretty volatile in the market. It does continue, as we've seen for the last little while, to be fairly difficult from a swing point of view because of that volatility. But at the same time, the trend just keeps pushing us down, right? No matter how crazy it is, we keep finding our ways lower and lower and lower. I do think, out of the money credit trades have been very effective in this market. I've been seeing some fairly, at least in my opinion, I know sometimes some of that's the eye of the beholder, but I've seen some pretty good premiums for selling some pretty far out of the money credit spreads on stocks and on the spiders and NASDAQ, things like that. So I really think that that's, always a good safe haven, if you will, to go to in a volatile market. Go with the trend, find things that are, out of the money that it has to break multiple levels of resistance for you to get into any sort of issue. I'm kind of a wimp, so I am not afraid to do wimpy things. So, but ladies and gentlemen, that is where we find ourselves after at least a bullish day in the market. Again, let's see if we can get any follow through. That's not going to be, assuming we do, it's not going to be enough to get me on board from a bull. But again, it's not going to keep me from potentially taking some bullish opportunities if it's out there. But really, generally speaking, I will be looking at as a retracement opportunity personally, we'll see if that's the right way to look at it or not. But hey, we got to get some follow through tomorrow. And it's been a while since we've seen bullish follow through, right? From a broad market point of view, we have to go back to before this started happening to really see that. So we'll see. We'll believe it when we see it, right? So continue to follow your rules, but start prepping those potential bearish retracement opportunities. You know, maybe we get them, maybe we don't, but it's a great time to do that. You can kind of start looking for bearish breakdown opportunities. You can also start looking for those, you know, bullish opportunities. You don't have to agree with me. I think you should be trading into things that are, you know, showing strength, that aren't be breaking all-time highs, but I want them to be breaking strong levels of resistance personally. But whether you agree or not, you can start prepping those too, because hey, we're going to get some opportunities. Maybe we'll like them, maybe we won't, maybe we'll take them, maybe we won't, but we'll always be ready, right? Because I never want to miss an opportunity because I wasn't ready. I pass on things all the time, and in hindsight, think, oh, I should have. You know, I'm sure you guys do too. So, but I could live with that because it was my choice. Never want to miss the boat because you weren't paying attention. So, ladies and gentlemen, that will do it for the market recap today. But as always, it is certainly my pleasure, and I do appreciate everybody's time. Be sure, if you haven't already, to subscribe to the Tackle Trading YouTube channel and hit that notification bell so you can be alerted to any new videos that we're doing over here. And be sure to follow us over at Tackle Trading on Twitter to keep up with some of the things that we're finding interesting on a day-to-day basis. If you enjoyed the market recap, it's always very helpful and appreciated if you do give it a thumbs up to let us know that we're on the right track. It's good to see you guys. Hopefully this is a setup. I'm going to continue to work on my setup. Kind of have to, I guess, take a good look to the other side, kind of figure out a better setup. But it's great to actually be able to see you guys. And you're always welcome to let me know what you're up to. And if you guys have any thoughts to what's going on, never be afraid. I'm always interested in hearing another trader's perspective. So thank you guys so much. As always, it is my pleasure. Get out of here. Happy trading. And I will see you all in the next one.